All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, so I did make a short update video last night explaining when we started seeing this dump to the downside, why it was likely to continue down lower. We didn't make new lows today below the lows from last night during that video, and I still think more downside is probable. I did say we would see small bounces along the way, and I believe in yesterday's video, I highlighted the 84.6K, which was a daily level in confluence with the naked daily point of control that was down there. And that level being the key level that we wanted to see a little bit of a bounce on Bitcoin to end our little wave three to the downside. We're in a fifth wave impulse, it looks like most probable. But if we talk, when we left Friday's live stream, we were right up in this area here and we were forming this little mini range. And we had just confirmed some bearish divergences, higher highs in the price action, lower highs in the momentum waves, and our money flow was draining out of the asset as the range was forming both on NAMI and Market Cipher B. And we finally did come up and bearishly backtest our Fibonacci channel, that our key Fibonacci channel that has been our trend for the entire bull market. So last week we closed our first weekly candle down below that Fibonacci channel, and we were expecting a bounce and a retrace and a bearish backtest to backtest that Fibonacci channel. If we did reject, we would expect ultimately new lows below 80.5K. And over the weekend and throughout the week and over the weekend, the holiday weekend, we did pump up. We did hit into that resistance, confirmed bear divs on Friday. And on Friday's live stream, I said it was highly likely that we were going to form a range over the holiday weekend. And that is exactly what happened. We continued to form this range over the weekend. We were looking at this possible Model 2 distribution, a mini like intraday distribution, or a not intraday, but intra-weekend distribution with a left shoulder, head, right shoulder, or tap 1, tap 2, tap 3. And we were talking about this range as it was developing on Friday, just this part of the range here. We were talking about it being more likely to be distribution based off the confirmed bearish divergences and the money flow draining out of the asset as the range was forming. So it happened. We saw that happen, and we got a little bit of a drop after seeing that rejection from the Fibonacci channel. And it was also the rejection. You can see this purple box spans about $1,000 from about 91.5 to about 92.5. And the reason why we were looking at this level being our very key level to reject is if we zoom out onto the daily time frame, you can see that is also the bearish backtest of our very key anchored VWAP, our 49K anchored VWAP. And remember, I think I talked about this a little bit in yesterday's video update. If you didn't catch this last night's, our 74K anchored VWAP was our very key anchored VWAP to maintain the bullish trend that we've been seeing since April. And once we lost that bullish momentum, that sentiment shifted, we were looking for a bearish backtest. And if we bearishly backtested and rejected, we were looking for new lows on the charts and potentially continuing this impulse down to the bottom to the next major support level, which was down here around 91.5K to 92.5K, which is your anchored VWAP from the 49K lows, your next major bullish volume support level. And it was also the bottom of our Fibonacci channel that has held us the entire bull market, but it was also our macro range value area low. So if we turn on that range for all of 2025's price action, you can see that the value area low of that range is pretty much close by. It's a little bit lower now, but that's because we've had a couple weeks of price action underneath it. But if we pull that back a couple weeks, it is going to be right around. We pull that back here, you can see it was right around 92.5K. So that's why we were looking between 91.5 and 92.5K as our very key resistance. All last week, I warned you guys that this was the level to look for a rejection. Also, another confluence to look for a rejection in this general area was because if we're looking at our double 1-2 impulse to the downside, a wave 1, wave 2, internal wave 1, internal wave 2, and our rejection from 107.5 all the way down to 80.5 is our third wave in the impulse to the downside. If we pull our Fibonacci from the highs of the third wave to the lows of the third wave, your rejection targets are between the 0.382 and the 0.5 Fibonacci for a fourth wave, because we're looking for this as a 1-2, 1-2. Here's your third wave. Now we're looking for a 4-5-4-5 to continue this impulse to the downside, which will take some time to play out. It could take another month or 2 months to play out here. But with this being the very key bearish backtest, because it satisfies the target of hitting the minimum target of the 382, or the most common minimum target of the 382, but it's also below your invalidation, which would have been the golden pocket of that third wave right around 97K, 97 to 98K. So we did reject from those wave 4 targets between the 382 and the 0.5 Fibonacci, and we had the most macro resistance of confluence right in this area, specifically that bearish backtest of our very, very key Fibonacci channel. And you can see on the all-time high distribution range is where we kind of rejected from that Fibonacci channel, top of the channel. That's the main channel. The pink line is, this is the top of the main channel. The white line is the midline of the main channel. This is the bottom trend line of the main channel. And of course, we have our extinctions where we did hit into the 1.618 for the all-time high of 2024. But we're losing our trend for the entire bull market, which is a very concerning issue here. And we are now most probable to continue this impulse to the downside. And speaking more locally, we can zoom in more locally. But first, before we do that, you can see now money flow on Market Cipher B is now leaving the asset again. And remember, we did not have bear divs down at your 80 point, or bull divs, excuse me, at your 80.5K low, which is something we wanted to see if this was going to be more of a macro bottom. Also, there was not really any major support levels there. We just kind of bounced there. I'm sure there was some fair value gaps that were in there, order blocks and stuff like that, but it wasn't really a major support level. Also, on NAMI, you can see on the day that we came up and we rejected on Friday on the bearish backtest of that Fibonacci channel, we printed a hidden bear div signal on NAMI on the daily time frame. And a hidden bear div signal is a continuation of the trend. And our trend from the all-time high has been a downtrend, a bearish trend. And so we expected us to possibly reject from that area and now come down to make new lows below 80.5K. But if we're looking at making new lows, we are looking at a 1-2, 1-2, our big third wave here. We did reject in our fourth wave from the target we were expecting to reject from. And now our fifth wave is expected to come down to make new lows below 80.5K. And then we're going to have another bigger 4 and then another 5 here to finish your double 1-2 impulse. So zooming in now onto the 2-hour time frame, we talked about this little mini range that we saw over the holiday weekend being likely to be a distribution range at key resistance. It was, and we are starting to distribute down. But we talked about some local support levels where we could see some bounces. And I believe I went over this in last night's video. But we were looking at the daily level and that naked daily point of control at 84.6, really. And you can see we did bounce. We wicked past it a little bit, but we are seeing a little bit of a bounce from this general area of support. And we are pushing up slowly here. Now, we did confirm some bull divs on the hourly chart. If we look on the hourly chart here, as we were making those 2 new lows today, actually 3 new lows today, from last night's low to the 2 new lows today, confirmed bull divs on both NAMI and Market Cipher B, and your money flow is rising to the upside here, I did post in the Telegram that I would be longing this if we did reclaim 84.6, and I am in a small scalp long right now from 84.6. But with our overall bias, our larger time frame bias being to make new lows below our 80.5K lows in a fifth wave impulse to the downside, we can now look at this structure from the rejection of our Fibonacci channel. And if we go ahead and let me just turn off these levels now, clean up this chart. First off, our initial drop could be a wave 1. This slow, grindy price action over the weekend is a wave 2. All of this could be your third wave to the downside. We're now in our fourth wave corrective target before seeing a possible fifth wave to come down to take out your 80.5K lows here, completing your fifth wave impulse to the downside. Now, our fifth wave impulse could extend all the way down to our much bigger support level down here between 78.3 and 77.3, where we have a weekly level. We have a naked daily point of control and a naked weekly point of control down there. I'll go ahead and turn on those levels for you real quick so you can see those. So a weekly level at 78,370 on Coinbase, and our naked daily point of control at 77,300 or 77,290. And then our naked weekly point of control is at the exact same spot, 77,290. So we have some support down below us that we could be looking at the fifth wave to end. And if we look at the drop that we saw from Friday through the weekend here, and we did say it was likely to range and be very boring. Sure enough, it was. It was a holiday weekend, not a lot of people trading. But if we pull our Fibonacci from the highs of the rejection on Friday to the lows that we made that same day, not that same day, that same week, Saturday, and we look at our golden pocket, you can see we actually didn't touch the golden pocket. We front ran that golden pocket just very, very slightly, at least on Coinbase we did. And really between the 0.5 and the 786 is a very common target to reject on that wave 2. So we did reject from a common area, even though we didn't hit the golden pocket. And our third wave is pushing down. And why do we look at this as a third wave? Because if we turn on our volume here and we look at our volume, you can see we have local big spikes and increases in volume as you're breaking to the downside in this distribution, making it more likely to be an impulsive price action to the downside rather than a corrective move to the downside. Volume is increasing on the dump. So still looking right now at making new lows. We are potentially within this structure since Friday. Now we're zooming in even more and looking just at our fifth wave of the overall bigger impulse to the downside. And we want to see if this third wave is in right now, which it does look like it could be in. We want to see a bounce in our fourth wave. And remember, our fourth wave targets are between the 0.382 and the 0.5 Fibonacci, pulled from the highs of your wave 3 to the lows of your wave 3. So if we turn on those targets, we are coming up to that target right now, coming up to that target. And what I'm looking at is a couple key things here. You can see the liquidity from last night's like dead cat bounce high is right up into that 382, right around 87K. 86,925 is where your 382 is. Now, if we go on to our liquidation heat map and we just look at the last 48 hours of price action, this is a aggregated heat map looking at all the major exchanges. You can see that the liquidity that is locally just above us is coming up into that 382. Taking all that liquidity above us would satisfy our wave 4 target and also stop out some late shorters before continuing the move to the downside. So I am looking at taking some profit when we hit this. I told you I'm long from around 84,600. I plan to take some profit right around $86,900. And of course, I will leave some open just in case we get up to this 0.5 Fibonacci, where we have about $87,900. We have some liquidity, and we also have this little high in here. If we zoom in onto the 15-minute chart, you can see that we're kind of starting to form a bottoming range. We had our big aggressive move down here, and then this is kind of a sideways range that could be forming in here, and that sideways range. So if we look at that high of that sideways range, let me just go ahead and grab that. You can see that high at 87.7 is right into your 0.5. So if we don't have a liquidity grab of this high directly into your 382, then we do have the next level. We have some liquidity into that 0.5. But I will be taking at least, I think I'm going to take 60% profit out when we hit this $86,900 region, which we're coming up to right now. Also, we can see that this does look a little bit three-wave corrective as far as right now goes. And money flow is leaving the asset on the 15-minute time frame. We did confirm bear divs on NAMI, lower lows in the price action, higher lows in the momentum waves here. Excuse me, higher highs in the price action, lower highs in the momentum waves. And we did have, if we zoom back out to the 4-hour chart, we did have the confirmed bear divs as this range was forming in here. You can see on Market Cipher B, it's a little wonky, but this is kind of bear divs here. But on NAMI, you can see it very nicely. Confirmed bear divs on the 4-hour. Money flow had topped out, and money flow started to drain out as that range formed over our holiday weekend, making it more likely to be distribution. And that is what we're seeing, a distribution to the downside. So that is kind of what I'm looking at here for Bitcoin, eventually coming down to take out your 80.5K lows. And we did open a new monthly candle. This is the first day of December. We do not have any new monthly levels on the chart. But if we look at some of our new, let's see, did we have a new weekly level? Let me zoom out to the 4-hour chart here. And we do have some new key volume resistances and time frame resistances as well. So obviously we have that at 101K, we have a weekly level up there. If I just zoom out to the weekly, you can see, actually that's an old one. I'm sorry. I need to take that off the chart. No new weekly levels. We did have a weekly support, but we broke it down today. We broke through it today, and that was around 86.6. As far as our daily levels go, though, our daily levels, we have come down today and busted through both of our local daily levels. I talked about this daily level around 86,400, 86,300, 87, excuse me, 300. And I was saying that I'm not really looking for anything there. And then, of course, our daily level that we bounced from at 84.6, 84.7 today. And then as far as our volume levels go, let me go ahead and take this off the chart and we'll look at our volume levels. We did now with the monthly close, we have a new naked monthly point of control. And our new naked monthly point of control is going to be right at those highs, right around 91.5K. So we now have some new volume resistance at a naked monthly point of control, but also if we turn on, and this is old, I need to get rid of this. If we turn on our naked weekly points of controls, you can see it was also confirmed as a naked weekly point of control. And if we turn on our naked daily point of controls, you can see it was also confirmed as a naked daily point of control. Let me get rid of that. That's old. So 3 new volume resistances at that 91.5K area. And then, of course, this 84.6, I left it on the chart. It's no longer naked. That's where we bounced from earlier today. If I zoom in onto that 2-hour time frame, you can see we wicked past it a little bit, but that 84.6K naked daily point of control was where we did bounce from earlier today with a little bit of wickage past it. Let's let this load up. Yeah, you can see right here, naked daily from, what was it, last Saturday or last Friday? Saturday it was. But now we can delete that off the chart because we've hit into that, and we can also delete that daily off the chart because we've now hit into that. You can see below us, we do have some support coming in 79,500-ish. We have a daily level, but really the big support is going to be this weekly and this naked weekly POC between 78.3 and 77.3. All right, and I do think we are likely to continue down with small pushes along the way. So I am scalp long from 84.6, but once again, I plan to take profit when we hit that 382 at $86,900 and move my stop loss to break even, leave a little bit of it open just in case we go to that 0.5. Another thing I warned about last week on Thursday and Friday's live stream, if we look at our order flow charts, and a lot of people were getting bullish last week when we were seeing this little bit of a rise to the upside. First of all, we talked about how volume was getting lower and lower and lower as we were rising up within this, making it more likely to be a corrective move to the upside. But also, if we actually zoom in and look at our CVD and open interest, we saw that this was a trap that the market makers were potentially laying out against retail that happens all the time. So as we were rising here, you can see our open interest was pretty much steadily dropping to the downside. And what does that tell us? If our open interest is dropping to the downside, that means positions are getting closed out. And I shown you guys this in last Friday's live stream, but you can see this last leg of shorts that came in here on Thursday and Friday. It was fresh shorts coming in because our open interest was increasing. So those are new positions coming in. And we saw CVD heavily decreasing, meaning it was market shorts. A majority of the positions that were opening were market short positions, opening in after a multi-percentage dump to the downside. You know, opening way late was what I'm trying to say. And so we had a lot of shorts that were late entering into the market and potentially about to get stopped out or liquidated in a false move to the upside, in a corrective move to the upside, just to grab some liquidity and then continue the overall trend. And if we look at this price action that we saw all of last week, we were rising to the upside in the price action. Our CVD was increasing, meaning it was long positions coming in, right? Because your CVD is just market longs or market shorts. So since our CVD was increasing during this rise, it was long positions entering. But we knew it was not new long positions based off your open interest decreasing. Because if your open interest is decreasing, it just means shorts are getting stopped out or forced liquidated. And that is a forced of a short is a market buy. And that's why this is going to rise. Your CVD is going to rise. but we know it wasn't new positions, a healthy move to the upside. It was more of a trap, a trap to stop out the late shorters and also get some people long in this general area. And you can see once again this trap worked relatively uh, uh, again when we saw this last leg of longers longing towards the top of our range. You can see our open interest was increasing a bit here. CVD was going up here. And once again, we had some late longers stepping in late right up into our key resistance between 91.5 and 92.5. And now those positions, sure enough, are getting stopped out on the distribution to the downside. And you can see that because your open interest started to drop again and your CVD started to drop here, showing that a forced close of a market long is a market sell. So we are seeing this play out very technically for Bitcoin. I do think personally we are going to make new lows below 80.5. Yes, that could take a couple days to play out. Yes, we could see a bigger fourth wave correction in here. We might not see this if we're saying our big third wave down on the daily impulse to the downside. This is our third wave from 107.5 to 80.5. Our fourth wave could be a bigger flat correction in here where we kind of make a double top or, potentially come up to stop out some of this liquidity in here and then see our fifth wave to the downside here. But right now, at least locally, this does look impulsive to the downside. We'll have to see. We are reacting from that level we wanted to react from, our naked daily point of control and our daily level. And I am still looking at a larger bias of being bearish with new lows coming in. That's honestly about it for Bitcoin, guys. Covered some of this in yesterday's live stream. Actually, one more thing to cover on Bitcoin. If we go to our larger chart here, our Binance chart, we zoom out to the daily time frame. Actually, let's zoom out to the 3-day time frame. And if we look at this 3-day chart, one of the things that I've been talking to you guys about in this entire cycle is we finished our 5-wave weekly impulse to the upside. And the reason why we could classify this as finished when we hit our 108K all-time high back in February, late January, middle of January, is because we finally broke weekly market structure bearishly by taking out those range lows. So that was our first break in market structure bearishly on high timeframes like the weekly. Therefore, that showed me that this impulse, this 5-wave impulse to the upside was completed. Now, after any impulse completes, you're looking for a corrective move. And in this larger cycle, I talked about this all the way back in April, that in a super cycle type scenario, we might be able to see some sort of flat correction come in here and then start a whole new bullish high time frame impulse to the upside. So we were looking at this ABC correction, a flat correction, and sure enough, on our B wave, we did reject directly from the 1.382 Fibonacci extinction, pulled from the highs of your A wave to the lows of your A wave. We did reject from that 1.382, which was right up in this area. And you can also see it was the rejection from the midline of our pitchfork. This is our multi-cycle pitchfork, which has been highly, highly respected. Rejected, flip to support, rejected, flip to support, distribution range above it. 1, 2, 3 taps trying to get above the midline. We couldn't, and now we're dropping to our next major support level and next major pitchfork support level. So within this bigger flat correction, inside your C wave, you're looking for an impulse to the downside. And we've already diagnosed that this is most likely to be a double 1-2 impulse. So let me zoom into the daily chart. And we're talking about this being a wave 1, a wave 2, internal wave 1, internal wave 2. Here's your third wave. We need a 4, 5, 4, 5 with our minimum target, if this impulse is going to play out, to take out your 74.5K lows. And so I am expecting Bitcoin to continue lower over the next week, over the next month or so, and to finish this flat correction. And you can see we do have some nice support of the pitchfork band. We did reject from the midline of the pitchfork band. Oftentimes you will fall to the next major pitchfork level, and you can see the bottom of the band would be coming in right around that key golden pocket of 70K, where our prior range value area high is as well. I've covered that many times, but if you want to look at that in depth, we can go over that in a different stream, or you can go back and watch some of the other streams. But yeah, Bitcoin continuing the impulse to the downside. I do expect new lows to come in. Money flow looks pretty bearish here. Hidden bear div printing on the daily. Okay, Going really quickly through some of the altcoins. On Ethereum, let's zoom into the 2-hour time frame. We were looking last week at rising within this ascending channel. First off, we did reject, let me get rid of this. We did reject on Ethereum from our, excuse me, we didn't reject. We bounced on Ethereum from our major support level that we had laid out. This was the pitchfork midline. It was also the golden pocket. Let's zoom out to the daily time frame. Pitchfork midline, golden pocket in here, and the prior range value area high. You can see all of that was in here. And we did see a nice bounce from that support level. We had this support level marked out ahead of time and let you guys know we were likely to see some sort of reaction from this level ahead of time. We got the bounce, and within that bounce, the last week, we were rising within an ascending channel. And so if I come in here, sorry, let me just kind of clean up this chart a little bit. I'm going to hide this range. And we were looking to come up within this ascending channel. I was looking to come up just a little bit higher to hit that 786 Fibonacci, which also we had some other confluences in that general area. You can see the channel midline was also there. But we did reject generally from that 786 golden pocket area. If we turn on the golden pocket as well, you can see we formed that range right inside that golden pocket. But I did say the second that we lose this channel, we're likely to break down to at least sweep the liquidity of the second pivot of the channel. But really with our support at the 786 Fibonacci down below was where we were looking, because it is close to your pitchfork band, your pitchfork midline. And also we had a naked daily point of control that was close by there. If we turn on our naked daily points of controls, you can see we had a naked daily point of control that was just above that at like 27.92. So, and then we also, I believe, had a daily, not a daily level. Let's see, what was it? Naked weekly POC. No, okay, so maybe it was just that naked daily point of control in confluence with that 786 down there. But we did break down from our ascending channel, and sure enough, we got the impulse to the downside, and we're coming down and bouncing from that support level. And I did say that it's likely to come down to retest again. If you watch Friday's live stream, I said we had the initial bounce, but if we do reject from this general area, we're probably going to see a higher time frame back test of that level now and can kind of form a range. So let me go ahead and clean up this chart, and we'll talk about that range here that we were possibly going to see and expect over the next couple of weeks. If I just zoom out to the 12-hour, oftentimes when you come down, and let me turn off these naked dailies. I'll get rid of some of this stuff real quick just to clean up the chart. So oftentimes when you come down to this major pitchfork support level, you'll see an immediate bounce, and then you'll get sort of a range that forms in here, and it's either going to hold and break back up to retest the band, or it's going to break down and come down to your macro golden pocket at 2250-ish. So we are now back down and hitting that pitchfork midline. You can see we're hitting it perfectly right now. We're hitting the local 786 right now. And I did take a scalp long on Ethereum as well. Now, Ethereum's money flow, bearish on the daily time frame. Once again, printed a hidden bear div and a bear div up at the highs up here. If we zoom into the 4-hour chart, you can see that market cipher B, higher highs in the price action, lower highs in the momentum waves, but also multiple drives of bear div on NAMI and money flow draining out as we were rising within this channel, making it more likely to be a corrective move. And so I am scalp long, and the reason why is because we did bounce from our 786, and kind of in our wave 3, I was expecting a bounce on a wave 3. And so now if we zoom into the hourly chart, I'm looking at just taking profit very quickly coming up here. If we pull our Fibonacci from the highs of wave 3 to the lows of wave 3, and we turn on that 382 to 0.5, you can see our 382 coming in right around 28.45 is where some liquidity from last night's little dead cat bounce was. So looking to come up into that general area is where I plan to take at least 50%, 60% profit on my scalp long. And that long is from around the 786. And then I will look to potentially flip short here as well to look for one more new low, because we're looking at this as a wave 1, wave 2, wave 3, wave 4, and then we could see our wave 5 in here to complete this impulse and maybe see some sort of double bottom here on Ethereum. But overall, Ethereum is still at our major support level, being that pitchfork midline. And yes, there's a possibility that we form a sideways range here. Actually, I think it's a big probability that we form a sideways range here, but we might continue down in this local impulse that we've seen since Friday to come take out your lows and then see a nice move up to the top of the range to take out your highs of the range, and then give some Ethereum some time to decide. So also Ethereum, we could pull a range and kind of look at this sideways price action in here. You can see we're below the value area low once again. And it does look likely that we are overall going to continue the downtrend. But right now we're seeing a small scalp long opportunity. Looking at our naked monthly points of controls, let's just go to the naked monthly. Okay, naked monthly point of control. We have a fresh naked monthly point of control that's coming up at around 3,032. I'll just mark that out right now. And I'm sure our naked weekly is going to be there as well. Yes, naked weekly's there, and our naked daily point of control is going to be there as well. Yeah, naked daily as well. So we have a lot of resistance up in that general area at $3,000, 3,032. And as far as our daily levels go, if we zoom out on Ethereum, we do have a daily level, at least on the Coinbase chart with this doji here. We have a daily level coming in at 29.91, a fresh daily level. And of course, we've already hit our support, our daily support level. You can see. So really, there's no, besides this 786 tap that we just did, the local 786 tap and the pitchfork midline, there's no other support below us. So I am expecting this to potentially continue to break down here. Another reason why I'm expecting this to continue to break down, guys, is because we did find reacceptance back within our 4-year long range. So let me hide some of this stuff, clean up the chart a bit. And if we turn on our 4-year long range, this range right here, and we'll pull this all the way to current price action, you can see that at least on Coinbase, now remember, I follow Coinbase volume levels more than Bybit or any other exchange, and they tend to work the best. But you can see we had our kind of failed auction range above that value area high. We lost it. We bearishly backtested it along with our pitchfork. We rejected from the top of the pitchfork. We were holding the pitchfork band for a bit. We were holding the pitchfork band for a bit on October 10th's crash. Once we lost it, we were looking for a bearish backtest. Upon the bearish backtest, if we rejected, this rejection right here was pretty much confirming reacceptance back within your 4-year long range. It was also confirming that we were likely to drop to our next major pitchfork level because we rejected from the lower part of the upper band. And we did. We dropped to our midline, and we're holding around our midline for now. We might see a bit of a range here within the midline. So just looking at kind of trading this range that might develop over the next couple of weeks here on Ethereum. And if we do break it down and lose that level and close a daily candle now, because remember, we could break this local impulse to the downside that we've been seeing today to take out your lows from, what was that? Friday, November 21st. But, we want to just SFP those lows and then push back above your pitchfork midline. If you don't, then you're looking for a breakdown to your macro golden pocket, which is coming in around $2,200 or so. Let's see, what is that rate here? This macro golden pocket pulled from the $1,400 lows all the way to your new all-time high, putting that on log scale. You can see that it's at 2250 to 2160. And what would make the most sense to me is if Bitcoin is going to continue to drop to like 70K, Ethereum will drop to this area, but we might see a bit of a range in here first, a local move up to take some liquidity before breaking down and some time passing. So by the time we get down to this golden pocket, it's going to be in confluence with our pitchfork band here. And that could be all the way in March. It could be Q1 of 2026. And then we might see a macro bounce from this level to kind of retest some macro levels. But that is what I'm looking at here on Ethereum. Okay, moving on to Solana. Guys, on Solana's live stream last Wednesday. Remember, I did a Wednesday live stream instead of a Thursday live stream because of Thanksgiving. And during the live stream on Wednesday, we were looking at rejecting from our level of resistance. We were looking at this first of all, we were looking at, let me zoom out here, the larger range that's almost 2 years long. It goes back to March of 2024. So, just a quarter under 2 years long. And we bounce from the value area low of the range in confluence with the bottom of your pitchfork band. Now, remember, at the top, we rejected from the top of the pitchfork band along with a key 786 Fibonacci lower high and a weekly level up there. We worked our way through the pitchfork. We came down to the bottom of the band, which was also the value area low of our almost 2 year long range. We saw our bounce, but what we said is we now need to watch for coming up to the macro point of control of that range. And if we do reject there, we can expect to at least form a range very similar to Ethereum. We're going to look at forming a range between the POC and the value area low. And that would also be a range that often forms within these pitchfork bands. I talk about this all the time on my channel. Within these higher time frame pitchforks, you often form ranges within these pitchfork bands. So in and around those pitchfork bands. So that's exactly what we're doing. Now, on Wednesday's live stream, we were coming up to that key resistance. Let me zoom into the 2 hour chart. Coming up to this key resistance, we had some local double highs. You can see the high here from November 15th, which was a weekend high, guys. Remember, weekend highs often get taken out. And we had a double top on that, 2 highs at the exact same position. We had some liquidity sitting right above it into your point of control of your range, of your 2 year long range. And so we were looking at this ascending channel, very similar, an ascending channel to come up and reject from that area. We did reject from that area, and during the live stream, we were hitting into it. I shorted it right here, right after the live stream finished. I posted about it in the Telegram. I let you guys know as soon as I did it in the Telegram. And I was looking at a couple levels. We were looking at the TP1 being your golden pocket pull. So from the highs, from the lows to the highs, golden pocket was coming in right where that pitchfork lower band of support was. We just busted straight through it, but I did have a limit TP order set there. I did take 50% out on that short. And then the next TP level, I said, if we come back down to the value area low, I'm going to take a little bit more profit. And I did, and I posted about that in the Telegram today. By the way, guys, if you are interested in joining the Telegram, it is free. First of all, I'll just talk about the partners of the channel real quick. BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. And if you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. If you deposit $100, you can get a 50% deposit bonus. And then they're offering various 20% and 10% deposit bonuses, depending on how much you deposit. Also, I have partnered with BYDFI to create a Telegram community. And in that Telegram community, I do kind of post my market analysis, my thoughts on the market, some trade setups for you guys. It is free to join that Telegram community. All that you need to do, it is a private group. All you need to do in order to join is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You will get the discounts on the trading fees, and you can get the bonus as well. I think you have to KYC to get the bonus. But if you do that, once you've done that, you can go ahead and click the Telegram link in the description of this video. Once you've clicked and you're in that Telegram, type in /verify in your user ID, which will be right up here. It's probably going to be a string of letters and numbers for you, and that'll get you access to that Telegram community. And once you're in, you are in. Okay, second partner of the channel, guys, I want to talk about is NAMI trading. And NAMI is this momentum and money flow indicator down here at the bottom. I use it for my entry and exit confirmation. So as we're coming up to resistance, we saw the bear divs on the chart, forming on the chart, bear divs forming on the chart, and it gives us confirmation to either enter a trade or stay out of a trade. And NAMI has been a pivotal indicator in my trading journey. They have really helped me out quite a bit in finding those right, staying in and out of trades or knowing when to take profit and not be greedy. And so if you're interested in purchasing NAMI, Right now, they are doing the best special they've ever done in the history of their company. And for the Black Friday Cyber Monday deals, the first 3 buyers can get 65% off. I do not know if this is used up yet. The next 5 buyers can get 60% off. And through tonight, through Cyber Monday, you can get 55% off if you use these codes: Divine65, Divine60, or Thanks Divine. So if you're interested in purchasing NAMI, I really highly suggest that you do it now while these discounts are available, because it's the highest discounts we've seen in the history of the company. And he did tell me they will not be going higher than the 65% discount. So that's the second partner of the channel. The third partner of the channel and fourth partner are just Bybit and MEXC, both great exchanges, both offering some discounts on trading fees, some initial deposit bonuses, and some futures trading bonuses. And if you're interested in signing up with those exchanges, links are in the description below. It's just a great way to help the channel. It's a great way to say thank you. Also, guys, please hit the like button for me. If you get any sort of insight into the market from this video today, please hit the like button. Please subscribe to the channel and share this video with anyone you think might find it useful. Okay, moving on to SUI. Now, guys, SUI is just kind of ranging around the bottom of the pitchfork too. Let's zoom out to the daily time frame. And we are coming down. First of all, we hit this naked daily point of control. Let me get rid of that. And we are coming down to the bottom of the pitchfork. And we've talked about this on Friday's live stream as well. But this is our bearish pitchfork. And if we're looking at the big impulse up here, this big impulse up here, we're looking at a potential flat correction in here, or a 3-wave zigzag correction. And the targets for that zigzag correction are between the 1-to-1 Fibonacci and your 1.236. So the 2 levels that I've been watching over the past couple of weeks has been the bottom of the pitchfork in alignment with that 1-to-1 Fibonacci, and the 1.236. Oops, I deleted the wrong thing. The 1.236 in combination with your large macro golden pocket. You can see around $1.09. So we are still holding and forming that range right around the bottom of our pitchfork, which is expected. Now, I do think that we might continue to make new lows here, and I'm actually looking, the big level I'm looking is this general area around $1.09. Where we could see a bounce from the 1.236, the 0.65 golden pocket, and we have a nice daily order block that's down there. But right now we are holding our pitchfork, and it's possible that we're going to form a range just like Solana's forming a range between the value area low and the point of control of its large range. SUI is likely to form a range right around the bottom of the pitchfork, maybe even moving up to the pitchfork band up there. But I think we're likely to form a range between the pitchfork band and our bottom of the pitchfork. So if we zoom in here, we can look at, let's go to the 2-hour chart, and we can look at this range that is kind of started to form. You can see over the holiday weekend, very slow, boring, methodical mini range here. And yes, of course, we formed that mini range at the bottom as well of the pitchfork. But if we pull our volume profile just from the end of that impulse and look at this sideways range, you can see we're coming down and bouncing from the value area low right now. Let's see. And if we throw on the lows, we did SFP the lows of last Saturday, excuse me, and Saturday's a weekend low. Those often get taken out. We just SFP'd the weekend lows into your value area low of your range. But one thing that I am looking at is today we closed the daily candle below our pitchfork, which is a bearish sign. We closed it below our pitchfork support level, which is a bearish sign. Also, you can see the point of control of our range is going to be in confluence with that bearish backtest of the pitchfork. Now that we're closing daily candles below it, we might expect a bigger breakdown to come down to our golden pocket below us. So what I'm looking at, and especially if we look at this distribution range that formed here, we could be looking at some sort of impulse to the downside. 1, 2, 3, only to come up here to reject and then see a 5 to come down a little bit lower. Then we might see a higher time frame backtest of the pitchfork before dropping to your golden pocket. So that bounce that we're seeing now could take us up to about 137.5. If we do see a move up there, we could be looking for some bearish divergences on low time frames to reject from that area. Zooming into the 1 hour chart, let's look at our naked monthly point of control and see. Actually, we'll just look at our naked dailies because it's going to be the same. And okay, no naked dailies up there. Actually, our naked daily point of control is all going to be all the way up here in this range at 153.7. So what I would say with Sui, not a lot to cover. We're starting to range around the bottom of the pitchfork. There's a possibility we reject from 137.5. This is going to be our local resistance just above us. Let's just mark that out real quick. And if we do, I expect us to continue making new lows on the chart. We are seeing some slight bull divs on the 1 hour chart, higher highs, lower lows, and NAMI is showing it as well. Money flow is starting to curve up on both these, and that does tell me we might be able to make a move up to 137.5. Yeah, 137.7-ish. Okay, moving on to Sui. Sui is bouncing from the bottom of our channel in confluence with our pitchfork band, the bottom of our pitchfork band. Look at this low. Look how amazing these channels and these pitchforks work. So if we zoom out here, last time we talked about this, I believe was Thursday or Friday. We did get a nice little support from our golden pocket, and this support box here was our golden pocket, our pitchfork, top of the pitchfork band, and a naked daily point of control. We came down there, we bounced from it, we made new highs. So that was the scalp we were looking at. Remember, we were looking at this just as a scalp. If we came down here to bounce from here, as soon as you take out these highs, you're looking at least taking some profit and moving your stop loss to break even. And then we came up to form our range. This is our weekend holiday range in here. And we kind of just ranged around the midline. We rejected, and now we are breaking. Let's do this. Let me get rid of this naked daily now. And let's get rid of this golden pocket. Let's get rid of this scalp long. And we are coming down, breaking down past the pitchfork, and we're breaking down to the bottom of the pitchfork band. And it's also the bottom of our descending channel. Now, remember, this descending channel, yes, there is some disrespect. We have some fake outs here, some fake outs. Well, that's just wickage past it, but fake outs here. But this descending channel was pulled off your initial dead cat bounce high to the lower high that was created down to your first low. And we've been following this descending channel for the most part ever since. And now, right now, we are coming to the bottom of the pitchfork band in confluence with the bottom of the channel. If I hide this channel really quickly, oop, didn't mean to delete it. I meant to hide it. And we look at our larger, zooming out to the daily time frame. That's the 2-day. We are coming down to your pitchfork band of support. And remember, we did reject on multiple low time frame backtests of our pitchfork midline. Once we lost the midline, we flipped it to resistance, rejection, 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 distributed down. Higher time frame backtest, rejected, new lows. So now we're finally coming down to the bottom of the pitchfork band, and this could hold us here. And we also are potentially developing some bull divs down here, lower lows on the price action, higher lows on the momentum waves. But look at NAMI has already confirmed the bull divs, and money flow's been rising on the daily time frame. So we could see, once again, if Bitcoin is going to range, if a lot of these alts are going to range, we could see a bit of a range within this pitchfork band, maybe making a couple new lows, but then we might see those daily bear divs play out and at least come up and hit our naked daily point of control at 14.6, let's say. So yeah, we are at local support here on Sui. The daily money flow on Market Cipher B is still a little bit bearish. That makes me think we might get a little bit of a range within this pitchfork band. But we are at support, guys, and I do think we could see a decent move up from this general area. You can see we bounced absolutely perfectly from, sorry about that, from our pitchfork band of support. And I am still looking at another low just based off this range, impulse 1, 2, 3, 4, 5. So remember, you can pull your wave 3 targets between from the highs of wave 3 to the lows of wave 3. And look between the 382 and the 0.5 Fibonacci. Well, look at where that 0.5 Fibonacci is coming in, right at the top of the pitchfork band. And if we are going to form a range within this pitchfork band, I think that could be really nice. So, of course, we are going to probably make one new low based off this local impulse, 1, 2, 3, 4, 5. So looking at shorting around 13.1 and it would also sweep out some of the local liquidity. If we zoom in onto the 30-minute, it would sweep out kind of all this local liquidity that we're building here. But that's what I'm looking at for SUI. Moving on to XRP. XRP is coming down to our golden pocket. Let's zoom out to the 4-hour chart. So we had this support level marked out from last week. Of course, I just needed to extend the box a little bit, but yeah, support level, golden pocket. It was a fair value gap in here as well. And I believe we had a naked daily point of control there. Let's see. Was there naked daily? Okay. Okay, no naked day. I guess it was just filling in that fair value gap. We had a fair value gap in there along with our golden pocket. And you can see we are now coming down to that golden pocket. But once again, guys, our range, let me go ahead and delete that. Our range that has been going sideways ever since the October 10th crash. We have lost the value area low now. You can see we were holding in between last week, kind of chopping and forming a sideways range, holding the value area low of the range, but we kept rejecting around the POC, a little bit above the POC, but we kept just rejecting POC, value area low, formed a bit of a range. It distributed and broke to the downside. So we are coming up to our local support level. We might see a bounce from this area just to backtest our channel midline before coming lower and hitting this naked daily point of control at 1.95. But overall, we are below the value area low of our about month-long range now from October 10th, November 10th. So almost 2-month-long range. This was October 10th here. So trade the range until it breaks, and we're below the value area low of that range, which tells me that we're bearish, likely to come down and make new lows, but we are hitting into our local golden pocket support. We might see a bit of a bounce, and if we look at our potential impulse to the downside, this could be a wave 1. This is our wave 2, wave 3 here, so we could pull our golden pocket or our wave 4 targets, and looking between the 382 and the 0.5 Fibonacci. And this count actually gets a little bit weird up in this range here for XRP. It's a bit different, but we could look at also this as being kind of a flat correction in here and the start of our impulse down 1, 2, 3, 4, 5. So there's a couple ways we could pull this wave 4. And if we pull it to the highs of wave 3 here, you can see that 382 comes right around the midline, ran 207.4. But overall, we are at local support. We could see a bounce from here. And then after that, we might be able to reject and continue down to make new lows. So, and if we do reject to continue down to make new lows, we do have that naked weekly point of control at 195. And I believe our 786 Fibonacci is going to be just below that. Let's pull that. Yeah, a little bit below that. So the next level, I would say, naked weekly 786. But right now, we have to get above the midline, which is around 207. We are printing a green dot on the 4-hour, but if we zoom out to the daily, on the daily time frame, money flow is leaving out of the asset, and we kind of invalidated the bull divs here as well. So I would expect us to continue kind of grinding sideways and down a bit on XRP, and we might continue grinding down until we hit the bottom of the channel and sweep this liquidity at 158. You can see we are 161. We have some liquidity, so we might, if we do reject from this midline, we could see a quick flush down to grab that liquidity and then see a bigger rise back up to back test some levels. But that's about it for XRP. And then lastly, let's go on to Chainlink here. Chainlink is still just around our major support level, being that macro value area low at $12. And you can see that value area low is now shifted down a little bit. Did we hit into it when we first? No, we actually have not hit the value area low yet. So the value area low in this range is a 3-year long range, I believe. Let's see. It goes back to November of 2023. So 2-year long range. This range value area low is just below us. We did front run that last Friday, November 21st, and we did reject from our box of resistance that we laid out, guys. If we go in here, I laid this out on Monday's video way before we came up here. Look at, we laid this out on Monday's video. You can see the box starts on Monday, November 24th. When I made that video last Monday, you could see our point of interest for rejection was pulled from our range highs. We're looking at a range forming in between our macro point of control and our macro value area low. And so if we pull our golden pocket from the highs of that range to the lows, our golden pocket was coming in right around a naked weekly point of control. And that is where we form that distribution range up here. And we're rejecting and we're coming down. Now, our local support level that we talked about. So we did reject nicely from this box of resistance that we wanted to reject from. Our local support level that we laid out last Monday was the 786 in confluence with a naked daily point of control. Yes, we did wick past it just a bit, but we are overall bouncing. And actually, that 786 has to be re-pulled because we did make new highs. I haven't checked Chainlink this whole last week, really. 886, we're bouncing from the 886. So let me talk about this. If you do bounce from the 886 in a downtrend, in our overall larger downtrend, and I'm going to delete that naked weekly because that's where we bounced from earlier today, or we're attempting to see a bounce from right now. But we hit the 886 in a larger downtrend, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So now that we hit this 886, we might see a small bounce from this 886, but it's far more likely to put in a lower high before eventually coming down and taking out these lows. Now, we did front run our value area low down here, and our value area low is coming in right around 11.5. So I am expecting us to make one more new low locally into that value area low at 11.5. And if we look at the impulse to the downside from this range, a wave 1, a wave 2, a wave 3, we could bounce here for a wave 4 before coming down, taking the liquidity from Friday, November 21st into your value area low, and then we could form that bigger sideways range here in between your POC and your value area low. So that's what I'm looking at. So a possible long opportunity around 11.5, only if you SFP the lows. So what I would be waiting for is a drop down after seeing this small bounce from the 886, and we could reject between the 382 and the 0.5. Once again, your wave 4 targets. So I'd be looking for a rejection between 12.38 and 12.58. But we could be seeing a wave 4 rejection and then another low to finish this local impulse to the downside. And I would be watching, in order to take a long on Chainlink, I would want to see an SFP of that low hitting the value area low. And then once we reclaim this low at 11.596, you could enter long. Stop loss would go below wherever that low was, and I would be targeting up near the highs of this sideways range that is developing. We can pull this range. So up near these highs, point of control, value area high. And of course, this volume profile will change the more this range matures here, but that's what I would be looking for. So I hope this video helps a little bit. Guys, I will be live streaming tomorrow, 2 p.m. Eastern Standard Time. Please come join me there. And have a good day. I will see you tomorrow.